how would it work for people that are always talking about the BRRRR?
The BRRRR method?
Yeah.
Oh, yeah.
Hey guys, welcome to another episode of Break It Down with Braydon. Super excited. I got John and Rebecca St. Thomas on with me today. Thanks for joining.
Well, thanks for having us. I'm excited to be here.
Absolutely. John and Rebecca are with CMG Financial.
Yep.
And been with mortgage lenders for several years now, and I've had the privilege of working with them in the past, and just great people. I've known John and Rebecca actually for probably 10 plus years now.
I was gonna say a long time.
Yeah, a long time.
Even
Maybe
before we were,
that, yeah.
even before we were doing this for work.
15 years actually. Now I think
Yeah.
about it. Yeah.
Yeah.
We're getting old.
Oh yeah, yeah.
Hey, don't say that.
Sorry,
Please.
No, I'll give you a little story. Braydon and I met playing hockey.
Yep.
And I'll never forget, you were playing for Desert Mountain. I played for Notre Dame. And Braydon's probably one of the few guys who actually put a serious hit on me. I'll never forget. We were playing at the Coyotes rink, or the Glendale Arena, and I was coming across the blue line, and I was not looking, and you came and totally cleaned my slate. So you are one of the few people who I can honestly say put a serious licking on me.
That's funny. I was going to say the same thing. I think it's you and Vinny were the only two that could actually put me on my ass from time to time as well. I'm like, all right.
The feeling is mutual then.
Yep. Yeah, Vinny was like 240 or whatever in high school. Big boy.
Real big.
Yeah. But anyways, back to business. So you guys joined over CMG a little while ago, and things are kind of rocking and rolling. And I know you guys kind of moved over because they had a couple of unique products and stuff. And just before we jump into that, though, just kind of give everybody a little bit of background about yourselves, kind of how you got into the business, how long you've been in the business, and things like that.
Yeah, no, absolutely. So I've been in the business as a mortgage banker for 27 years. Started with Great Southwest Mortgage when we founded Great Southwest Mortgage a little over 27 years ago. Really happy and proud to be with them for so long until the mortgage meltdown hit and everything.
You were employee number 9.
I was employee number 9, very proud to say, and stayed working with a family-owned and operated mortgage banker for my entire career. And so most recently I've done that through another company, and it was hard to leave and everything. But the reason that we wanted to make the change to CMG Financial, one of the large reasons, was we are the number one single family owner mortgage banker in the entire country. So in keeping with the mortgage banker, family-owned operated feel, we thought, well, why don't we just join the biggest and the best? And so in doing that, and we're going to talk a little bit about this today, they have 2 proprietary products. The one we're going to talk about today, the all-in-one, is just outstanding and just opening doors. And we're excited in our market today when not everyone's too excited to wake up every day. John and I are not only just so excited, but there's not enough hours in the day to talk to people about what we have to talk about. So we're so happy to be here today to talk to you about it because we're all fired up, you know?
I love it.
Yeah.
Yeah, and I joined, so for those, I guess, that don't know, Rebecca's my mother.
Yes.
So, yeah, because
thank
we're
you.
often mistaken as husband and wife a lot. I mean, probably once a week, someone's like, "Oh, it's so nice your husband's with you," and I'm like, "I'm her son." So that's pretty funny. But
Makes me feel great.
It does.
yeah, it makes her
Thank
feel
you.
great. Maybe not so much on my side, right?
It's the stash.
Yeah, it's probably right. Don't say that because then she'll be like, "Shave it."
Yeah.
But yeah, I joined my mom about 8 years ago and probably had no anticipation of getting into this business, but kind of stumbled into it. But yeah, I've been with her for the last 8 years. Like she said, we were at our previous company for 13 for you, pretty much 8 for me.
Yep.
And then moved over to CMG, where we've been really happy and really impressed with the stuff that they have. And to Rebecca's point, I mean, this is such a different market than we've been accustomed to the last 2 years, where it's just been drinking through a fire hose, and we've all been excited because the business has just been pouring in, and now it's completely different. But for us, we are still super excited because of the couple products, and we can't talk to enough people, and it is opening a lot of doors that would not be open to us otherwise.
Yeah.
Absolutely.
Yeah, I remember when we grabbed lunch, you guys were very excited about it, and we kind of went over it, and it's pretty cool. And there's a lot of intricacies to it and a lot of options with it. And why don't we just jump in? So
Okay, good.
talk a little bit about some of these products.
Yeah. So it's called the all-in-one loan, and it's not that it's difficult. It's just different than what we're accustomed to, right? We're very accustomed to the 30-year fix, the 20-year, the 15, even a 7-1 ARM. It's still your amortization. Everything is all the same.
Yep.
And they've been around since the 1930s. And so, our parents had them, our grandparents had them. We just get it, right? When I talk to a borrower, 30-year fixed is just, what's my rate? What's my payment? I understand the rest. You don't need to tell me or educate me on anything, right? With this, the education cycle is a lot longer just because it's different, right? I'm literally giving them a product that they're like, oh, I have no conception of this whatsoever. So, but it provides benefits that a 30-year fix could never provide. And I think like any product, it's not for everybody, right? Yeah. I mean, there's no one size fits all for anything in this world. But for the right borrowers, this loan provides feasible, tangible benefits that are way above and beyond what a 30-year fix could ever provide. So to kind of get into it in simple terms, it's a first position, just like a 30-year fixed is, but it's a first position equity line of credit, and it is attached with a bank account. So that's a little unique, right? It's a mortgage that comes with a checking account. Can't say there's too many others that do that, right? Yeah. So we're used to having our banking and our mortgage separate. This kind of combines that in one. And this checking account is totally, what we're accustomed to. It's just like if you had a checking account with Wells Fargo, B of A, Chase, right? It's got online banking. It's got mobile banking app. It's got Visa ATM, Visa debit, checks, wire transfers, Zell, like everything that we're accustomed to having.
All FDIC insured.
Yeah, all FDIC insured. We have technically 3 bank partners who do this, but 2 of them who are our major bank partners. So all that's standard. Okay. Now, this type of mortgage is referred to as an offset mortgage, and it's actually the primary means of lending in Australia, New Zealand, India. It's common there, parts of Western Europe, I believe in Canada as well. Our company just took this and made a couple subtle changes so that it can legally be done here in the United States, because the way that it's done in those countries is technically not legal here in the U.S. So we kind of took a product over there that we said, this works really well. Let's just kind of change it a little bit and make it work here. So to explain this, basically let's say you have a $500,000 loan, right? And we have our checking account. Yep. And I'm just going to say I'm a salaried employee. So I get paid, say, twice a month. And let's just say my paycheck, for easy round numbers, is $10,000 every 2 weeks. Yep. So I have a $500,000 loan. I get a paycheck that comes in for $10,000. My loan balance just went from $500,000 down to $490,000. Now, because it's a checking account, I'm going to use it as such, right? I'm going to pay my auto loan. I'm going to pay my health insurance. I'm going to go out to dinner with family, buy something on Amazon I probably don't need,
Standard.
Yeah, standard. All the standard stuff that we do, right? Make purchases. We're like, I probably didn't need that. So as the month goes on, that checking account's going to whittle down as it normally does, right? And as that checking account whittles down, our mortgage balance slowly whittles back up. So it'll go from $490 to $491, $492, as the month goes on. And so then let's say at the end of the month, after all of our expenses, I saved $1,000, right? All my expenses are paid. I have $1,000 that I've saved. So my loan balance made its way back up to $499 because I've got that $1,000 saved. Yep. Now, because this is an equity line of credit, interest is calculated daily. It's not calculated annually like a 30-year fixed. So that deposit that you had of $10,000, if that balance stayed for the entire day, that $490, you only paid interest on $490 that day. You didn't pay interest on $500,000. And then the next day you only paid interest on $491 and $492 and $493, as it went up. So that you end up seeing a substantial savings because you're paying lesser in interest. And then this cycle continues, right? You get another paycheck for $10,000. We went up to $499. Yep. Now we got $10,000. So now we're down to $489. And then we, spend our money and say we save $1,000 again. Now we're at $498, right? And this cycle goes on and on. So it's certainly for somebody who is a cash flow positive person and has, financial stability and control of themselves. Yep. For somebody who didn't have that, this could be something that, could ruin them feasibly, sure. Right? But what's neat about this too is not only are you saving a lot in interest, but there's a lot of different options that this creates, also seeing that it's an equity line of credit. So let's throw another scenario out there. Let's say that I'm going through my regular cycles and all that, I'm saving on interest and, my balance is coming down. Well, as my balance does come down, that interest amount that is assessed every month will start to come down too. So over time, as I gain equity and gain, principal balance, my payment is coming down as well. Yep. Because your deposits into the bank are the principal portion of your payment. At the 21st of every month, based on your previous month's banking history, you're going to get an interest amount that you have to pay. So we're taking principal and interest payments and we're just separating them. Deposits are principal, yep. And then your interest will be assessed based on what you're doing banking-wise. But so as that principal is gained and the equities gain, that interest payment comes down, right? So you can feasibly save more over time, which then drives the balance down even farther and faster. The other thing that's really cool to think about is, let's think about if I have $50,000 sitting in a Chase checking account, right? I mean, let's think about just our human behavior here. Why do we have money sitting in a checking or savings account? It's not to make money, right? Because we don't right. We, even on a high yield savings account, maybe we get like 2%. Like at the end of the year, you're like, hey, I made $400.
Yeah.
Like, that's great, but it's not really to make money. It's for accessibility and liquidity, right?
It's
like you
sleep
said,
well at night.
Yeah, like you said, emergency, right? Shoot, I need $10,000. I got in a car accident, whatever else. Like I need this money. I sleep well at night having the money, but it's not doing anything for you.
It's not making any money,
right? Yep. So on a 30-year fixed loan, let's say you have that $50,000 sitting in a Chase account and you put it in, to your payment on your 30-year. Well, it's great. Your equity balance just went down, right? But your payment didn't move at all. Your payment's still whatever that 30-year fixed payment is. And you also kind of just lost that money, right? Unless you do a cash out refi or you sell it, you're like, shoot, I can't. Now that $50,000 isn't, if I get in that car accident, I don't have that money now, right? Yep. Now with this product, you could take that $50,000 sitting in a Chase checking account, move it over into your all-in-one checking account. You just dropped your loan balance $50,000, which now just dropped your interest payment, maybe $200 for that month. So now you're saving at a rate of whatever your rate on this product is. But if you need that money tomorrow back in your Chase checking account because it's an equity line of credit, you just take it out, put it back into the Chase checking account. So you still have full liquidity on the money part, right? Yep. The whole reason why we have checking and savings, but it's actually going to do something for you as opposed to just sitting there strictly for liquidity purposes.
Yep.
Which is really kind of cool too, right? So somebody who has idle money sitting around, and I think we looked, the statistic is the average is like somebody has 30,000 sitting in idle money, right? Obviously some people have significantly more, some people have less, but if you do have that idle money sitting around, you can actually work for you and benefit you as opposed to just being there for liquidity, right?
So someone that could pay cash for their property, would they use a program like this then?
They could. I mean, maybe they're paying cash, but maybe they've decided, hey, I would rather have financing or at least have access to it so I can keep some of my money sitting aside.
Right.
Because feasibly, if you bought a $500,000 place and you put $250,000 down, but you had $500,000, you still have your $500,000 in the bank. You've got a $500,000 loan. But if you wanted to move your $500,000 that's sitting in the bank just idle into this product, then you don't have a payment. Your loan's effectively paid off.
Okay, that's what I was kind of.
Yeah. But if you want your $250,000 back, then you just take it back. You'll have a payment again, but you use it as you need it, and then you could park it back there again if you wanted to.
Yeah. Absolutely. Well, no, and you think about this. So as you know, John and I are real estate investors, and his family builds custom homes and everything. And so we're always looking for an opportunity to buy a new property, and you never know when you're going to get that opportunity. So for someone who's an investor, and you say you pay cash, well, park that $500,000 in there. Then you have equity, and you can take it back out, and you can use it as your own bank account to help you build your portfolio and everything else. And then when John talked about the deposits, so if you think about the powerfulness of just your $10,000 paycheck, right? Think about this for us as investors. So we have long-term rentals. We also have short-term rentals. So long-term, you get your payments once a month, right? So you just put your rent deposits in there. But if you're doing Airbnb or short-term, you're getting deposits daily, depending on what your bookings are, right? So the name of the game is put as much money in there, and then watch your balance go down, watch that payment go down, and then when you pay down the loan, which the average for paying down this loan is
8 to 12 years.
8 to 12 years. So if you compare and contrast it to a 30-year fixed, you're looking at paying that loan down in 8 to 12 years. You're going to have all that equity that you can access and have at your disposal. So like for us as investors, we were so excited about the program in general, but then we started thinking, wow, this application for us is going to be huge because we want to pay down these properties as fast as possible, have even more positive cash flow. Well, if we have more positive cash flow, we're going to keep putting more in there, and it's incredible.
Yeah.
So,
and then tap the equity so we can buy investment number 2, or number 3, or number 4.
What I like about it is it just gives you options.
Right.
Absolutely.
Because right now with the 30-year fix, it's just like, this is what it is. And this is what I'm paying. And so, like with you guys, it's like, okay, I could actually throw some money at this. And then,
well, absolutely. And, you think about this, right? You think about as John said, why do people have money stay in the bank? And I think you need to talk about the loan we just closed last week. So as a perfect example. But if you have money that's just sitting there, you want to be able to use your money to benefit yourself. Well, if you're sitting with money in a bank account, the bank lends it out 6 to 7 times to make money on your money, okay? They're not paying you for that. They're just saying, hey, thank you. Like in the good old days with your mom and dad and I, we used to get a toaster like many years ago at the bank, okay? Is someone giving us a toaster? Hey,
unless it's my wedding.
I'd like an espresso machine myself personally, right? But nevertheless, the money's just sitting there and it's not doing anything. Well, here you go. Control your own money. Have your own money work for you and benefit you. And for all of you wonderful Kiyosaki fans, which we are, talk about financial education and, spreading the word of how you can control your own destiny and your own, financial resources. This is a great product for that. So John, give us the example and talk about the loan that you closed last week, because that was really powerful of what happened with that.
No, this is a really good example. So we had a client who for the last year and a half had been trying to buy. When you're bidding 75,000, 100,000 over list. And he was doing this routinely. I mean, truthfully, he was probably the worst luck client that we've had. Because the dollar amounts that he was bidding over, I mean, they were almost like, I'm like, you sure you want to do this?
Right.
And even his realtor's like, are you sure about this? And he's like, I want this house, right? And then he gets outbid by somebody who did 130,000 or whatnot. So he could not get under contract.
That was awful.
So he goes, okay, I'm not going to buy.
Yeah.
And then he comes back to us probably like 3 months ago, like August, September, and he's like, hey, the market's cooled. Like, I know I can actually negotiate some things.
Yep.
I want to buy a house. And I was like, great, your rate's going to be 3 times what it was 2 years ago, right?
Yep.
And so then I show him that, and he's like, I don't want to buy a house anymore, right? Which is what a lot of people are facing, the affordability of where rates are. And so I said to him, I was like, well, based on your set of circumstances, I might have a product that really works for you. So I explain it to him. He totally gets it. And he makes a really good living. His wife makes a good living. And he's somebody who's very conservative and like at all times keeps like $250,000 in the bank, right? Just because I sleep well at night knowing it's there.
Yep.
And, I'm talking to him about that. I'm like, why do you keep so much money there? Like, what does it do? He's like, it makes me sleep. That's what it does. Right? Like,
Peace of mind.
Yeah. He's got money in other investment stuff, but he's like, this makes me sleep. So I showed him this and I said, hey, look, based on what you guys do and what you are accustomed to saving and based on money you have sitting here, I was like, you can use all this to your advantage. And his effective rate on this program, based on the amount of interest he's saving and what he's doing, his effective rate was 2.875 in today's market.
Yeah.
Right? That's not the real rate. It's the banking and everything that shows you what it, based on how much you saved, what the effective number is.
Yep.
But so I was like, this is the equivalent of you basically shopping 2 years ago. But now you can get everything you want, like you said, but you, because of your habits and things you already do, I'm not asking you to do anything different here, you're able to get a rate that is super, super low effectively, right? And so when he saw that, he was like, this is a done deal. We're going to go buy a house. And then he went and got under contract and closed last week.
So did they theoretically then move their $250 over to the all-in-one checking account?
Because I'm like, hey, you still have it,
Yep.
still liquid.
Yep.
You've got total access to all this. But at least that $250 you just moved over just dropped your interest, call it $1,300 a month, right?
It's huge.
Because of that.
Is there a maximum or a minimum that you have to move over to that account, or you can move over to that account?
No. Because when we do simulations for people, we have like a full simulator. You don't have to put money. Most of the times when I do simulations for people, even if they have money, I'll start it at zero and just say, hey, look, just so you can see how your regular cash flows work for you. And then we'll go back and say, all right, now let's add the money and move it over too.
Yeah.
So you don't have to, but it only can potentially benefit you to do it.
Absolutely. And like, it's so funny. So you think about in the old days when, we look at the amortization schedule and everyone's all excited, like, well, if I added another $1, how would this benefit me? And, all that kind of stuff. We have this simulator, which everyone has access to. And you can play with it, and it's really fun because then you're like, well, what if I did this? What if I did that? Oh, this is how it's going to benefit me. So it's really nice. So for that fiscally responsible person who believes in, financial goal setting, you look at it and you go, oh my gosh, this is so fun. I just saved this, and everything. And we just did a comparison for someone because, we've had people ask us, well, what if I just did that extra $100 a month or $200 a month? To my mortgage, how would that change things? And John, what's the statistic with how many people actually
I thought
pay?
this was a wild statistic. So there's only 4% of people that actually put extra money towards their principal every month in the country. Isn't that crazy?
4%.
4%.
Yeah.
Huh.
I would have thought it was much higher than that.
You'd think so.
Yeah. So now whenever a client says to me, they're like, well, what if I just did the 30-year where I did an extra 2? I'm like, is this a hypothetical?
Right,
Or
yeah.
do
Are
you
you
really
actually
do
going to
this?
do that?
Because
Right.
statistically, you probably don't.
Right.
But what's nice is on that simulator, you can do that. You could say, hey, on a 30-year that we're comparing it to, what if I put an extra $250 or $500 versus if I did the same thing with this product? And this product is just way better in that sense.
Absolutely. And we just did a simulation for one of our clients with just that example, and the all-in-one still beat it by a number of years. So I think it was like 5 or 6 additional years that it still beat it. So it was really powerful. So it's nice. So then you can show someone that and you say, oh my gosh, well, wow, this is great. So yeah, it's a lot bigger deal.
I love that.
Yeah.
Why else did you guys move to CMG?
Well, I have to say that we were just voted, and this is very powerful in the market we're in. We were just not voted, but we are one of the top 6 companies in the nation that's actually growing. So in a market that's shrinking and companies are falling to the wayside, very sadly to say, we're actually growing. We do retail, wholesale, correspondent. We have our own SEC, which means that we're a broker-dealer, so we can go to Wall Street, create and securitize our own individual products, which is one of the products we have with it all-in-one. We also have what's a program called Home Funded, and that would be kind of like an entry-level first-time homebuyer program.
It's called Home Funded?
Called Home Funded.
Okay. Yeah.
And
like Fund It.
Fund It, yes. And basically, it's like crowdfunding or you see on YouTube the GoFundMes for people, and they say, oh gosh, help my friend and do all this. Well, we have that program where it helps people with their friends and family go online, and they can contribute up to $5,000 individually with no sourcing of money. And that's the other thing, there's a lot, when you have a wedding and everything and you do a loan for someone, you're like, oh, we're so excited, you got $50,000. Well, we have to paper trail every $50,000, all of that, right? But with this, you don't have to do that. The other thing is that CMG will match for every dollar you put in up to $2,000, we'll give you, 2 for 1. So we're giving $2,000 to first-time homebuyers to help them with that. And then there's additional layers where, depending on, what median income you are, there's additional layers where we can get more money.
Yeah, and up to an additional $2,500.
Yeah, so it can be a total of $4,500, which you have. And that's really powerful in and of itself. But the other thing is we layer this with our regular loan products. So if you look at the history of down payment assistance, you pay a higher interest rate and higher fees for down payment assistance loans. You don't do that with this product, which is really nice. So again, it's something that they've created, to help people out there get into home ownership and everything.
Yeah.
So
historically, when you get a gift for a loan, it has to be like mom or dad, brother, sister. It's got to be very close family. With this, it allows you to do it or get a gift from anybody. So it could be people you work with, friends, whoever else. So it's neat because we create this campaign, and the campaign has the story of them buying. Maybe they just got married. Maybe they just graduated. We have a client who's a young police officer here in Phoenix PD. And then I said to him, I was like, this would be a great thing for you to do. I was like, tell your story. You're buying your first house. You're a young police officer serving the community. I was like, you don't think some people would be willing to give you $10, $50? Maybe some of the older guys on the force who really appreciate the work you're doing, they give you $100 or something like that. So it allows that extended group of people to gift money, but it also has the realtor's information too. So it's great branding for the realtor as well. But like the most I think somebody's ever raised, I think it was like $44,000 in Massachusetts. So they raised $44,000. We probably gave them an extra $2,000 because they raised X amount. So think about this first-time home buyer got all these people to contribute money, and now they're able to put like 20% down or whatever that number is. In Massachusetts, there was probably still only 5% down. Right?
Well, I love that for like a wedding registry or something like that.
Totally. As opposed to getting a toaster or a blender, right? That costs you $50 to $100. Like, yeah, exactly.
Right.
I already have 4 of these. You're one of 6 people who gave me this gift.
Thanks a lot.
Yeah, totally. Put it there for that. You graduate in college, do that as well. Yeah, so for the right people and situations, it's great.
And there's a maximum contribution per individual. You said $5,000.
So you can do more than $5,000, but at that point we will need like gift letter, sourcing documentation. But up to $5,000, there's no sourcing or anything, right? So we have like exclusive access to this from Freddie, which is really kind of cool.
Yeah, that's really cool.
Yeah.
How about the market? How's the market out there right now?
It's definitely different, right? than we've been accustomed to the last 2 years. I think we all kind of got fat and happy the last 2 years, and now that's changed, which is good and bad, right? It's bad in the sense that, okay, there's less business going around, so we all got to work more for it. And it will, as bad as this term sounds, I guess, thin the herd, right? There will be people ultimately who do drop out of the industry and things. But for those, I think, that do the right things and the habits that we should have always done, but we didn't have to do the last 2 years, right? Because it was you coming in the door. You couldn't even pick up your phone fast enough, right? for those people who haven't created those habits or do those things, it'll be tough for sure. But to Rebecca's point, I mean, I think we're really excited because for us, that all-in-one loan and some of these products, they provide us a means to talk to people who maybe normally wouldn't talk to us or get clients to purchase, like in our example of the guy who bought in Halloween who maybe wouldn't have bought otherwise, right? So if I didn't have that product, he wouldn't have bought.
Yep.
So it's...
You should have him do a testimonial video or something.
I was texting him this week.
Yes,
he was like, give me a week to
absolutely.
get in the house and then we'll do the testimonial video. I was like, all right, deal, we can do that.
Yeah.
Yeah, so...
But I think when you ask about how the market is, I think that there are incredible opportunities out there right now.
Yep.
It turned on a dime, and I think that a lot of the positive things are you're seeing sellers now contributing towards loan and closing costs. You're seeing them contribute towards buy downs, which I think that's the bright shiny object. I think that the thing that John and I both agree with the all-in-one is that you do this loan. You really don't have a need to refinance this loan, right? Yeah. When you do a 2-1 buy down, to quote John, you kick the can down the road, right? So you restart that and everything. And, that's a big concern. People say to us all the time, well, I really don't want to restart my mortgage. I really don't want to do that. Those are the fiscally responsible people out there, and that's what they want to do, which, they should do, right? But, you have sellers paying closing costs. We're not waiving appraisals anymore. Thank goodness for that. We're not waiving inspections. We're going back to the basic fundamentals, which what we should all be practicing in this business, which I think is really important. And so right now, I think that the opportunity is that, looking at inventory, plus or minus anywhere between 22,000 units of inventory, right?
Yeah.
We're right around there. And what's interesting is that it started to increase so dramatically, right? But we've been hovering, if you look at the numbers, right between 20 and 22.
Yep.
So we're kind of at this point where we're like, okay, got it. Well, if we're closing 6,065 units a month, let's just say, we're at plus or minus 3 months of supply of inventory, which is the beginning of what a balanced market by definition is, right? 3 to 6 months of inventory. So for all those people who are out there saying, well, gosh, I'm fearful and everything, right? Here's the thing. We now have inventory. Buy it. And certainly, again, we would love to do the all-in-one for everybody so they don't have to refinance. Yep. But let's be honest, get your property today, get your closing costs paid for, get a temporary rate buy down if you need to, right? And then refinance it in the future. Yeah. So because, historically, and, John and I were very fortunate because we had a wonderful CMG call yesterday. We had Dave Stevens on, and he was going over a lot of statistics and everything. If you pull up any, the index, the margin that we were looking at with the CMT, right? That's what we were looking at.
Yeah, the one-year CMT.
Yeah, the one-year CMT index. And John pulls up a particular one that has the grayed areas that show where the recessions are. Mm-hmm. And what happens after every recession historically to this point with the rates?
Like slash in half. They go
right.
down.
They go down and everything. So, if you look at what the opportunity is in the future, again, we don't have a crystal ball. Yep. But for the most part, if history repeats itself, rates will be on the downturn and we'll all have a big opportunity. Well, what's going to happen when the rates go down then?
Yeah, the madness will ensue.
The madness will ensue. Yep. And then, just like little Pac-Man, right?
Back to the inventory problems.
We're going to have an inventory problem again. Yep. And, nationwide, we are short about 5 million homes. And, with John's family, being in the custom home building business, we know that we have a shortage of materials. Yep. We have a huge shortage of labor. I mean, that's a huge crisis, right?
That's the biggest issue is what I'm hearing, yeah.
Absolutely. So we
can't.
Get
to work.
Yeah, no, yeah, we want to work. We want to work, 12, 14 hours a day. We're happy to do that, right? We feel blessed. But, it's interesting because we will not be able to build homes fast enough to catch up because, when we had the crash for 10 to 12 years, we didn't build homes, and we didn't build enough homes for the small amount that was built. So there's a huge opportunity. So I think that for people who are sitting there saying, "Oh gosh, I'm scared, I'm nervous," if you see the beautiful home that you love, and if you can get the terms that are good for you, you can qualify, and you get closing costs paid for you. Why not? Because the sky's the limit. You have a lot of future opportunities to refinance that, if so.
Yeah, it was interesting. Dave Stevens, who's the former CEO of the Mortgage Bankers Association and the former commissioner, I think, of FHA as well. Mm-hmm. He was saying that we have the biggest group of first-time home buyers in the history of the U.S. coming into fruition. Basically millennials and then Gen Zers, because the average first-time home buyer right now is like 34 years old. Really? So for millennials and Gen Zers, like we're coming into that. And what he was saying is it's going to be probably a perfect storm where you have the largest group of first-time home buyers ever over the next 10 years coming to fruition, but that's going to be paired with the inventory shortage of 5 million homes that's not going to get caught up in that same period of time. So he's like, the perfect storm will be, here's all these people that are going to buy, and they only have X amount of homes to go buy, right? Yeah. So then what's going to happen again? People will be bidding on homes, and the prices will get driven up again. So to Rebecca's point, I think that the underlying issues that caused the last 2 years are still there, right? The only thing, the artificial thing that's changed things has been rates. And so as soon as rates make their way back down and become more affordable, and Dave Stevens was saying that, I can't remember the name of the economist, but he's like, this is the smartest economist in the country. And he says rates will be down in the 5s by next year, which will certainly increase affordability. This is all going to start happening again, right? So, I mean, if you are trying to buy your first place, or even if you're an investor too, and you can find a great deal right now, like we have 2 places that we bought this year that we're doing projects on. I think as long as it makes, you can still cash flow, or, it still makes sense today, I think that, we're going to go right back to where we were. Yeah.
If anything, I feel like people are just looking at the numbers a little bit tighter now. And like you said, as long as it makes sense today in this market, then it's like, all right, this is going to be a win, because it's going to go back up, I think, eventually. And rates are going to go back down, assumably. And I think it's a good time to buy anyways.
No, absolutely. And there's a lot of sellers that, let's think about this honestly. There were a lot of people who said, oh, okay, I can just sell, I can get the, top of the market. And then they thought, let's just, sit there. Well, as things have, turned on a dime, there's a lot of people out there that need to sell homes. And, I sat in open house with one of my agents a few weeks ago, and we were talking yesterday, and she said, you are never even going to believe this. And I said, what happened? She said, they sold a house exactly like our house for $80,000 less just down the street. And I said, well, why? And she said, because they were desperate to sell. They needed to sell. And they needed the money to move on to another deal. And I said, wow, that's significant, And so we're seeing things like this where people are out there, and it's just like anything else. Like, no matter what market you're in, you have to look at the numbers, and look at those properties. And there's huge opportunities. John's looking at properties all day, every day for us, and you never know. So they're out there. And I think that, don't be scared, because it's an exciting time and there's lots of opportunities, so.
Talk about the 2 projects you got going on right now.
Yeah, so we have a project in North Tempe, and then we have another project that's funny. It's a Paradise Valley zip code, but it's technically City of Scottsdale. And that's a great example. That was a property that we got them to come down $400,000 to purchase that house. Just a lot of that was due to our due diligence and finding out what the city was going to require of us as we did our remodel and everything else. And so then we were able to take that over to the sellers and be like, look, like, I understand your list price, and I think it was probably a fair price, but based on what we have to do in order to do anything with this home, it's going to cost X amount. And so we were able to get, much more favorable terms. Even with this market shifting, with what we were able to get, I'm not worried about what our end result with that property will be. We're not sure what that property is going to be. I think we might ultimately sell that property. It may be a rental, but I think we'll probably sell it. The property in North Tempe, we will definitely hold as a rental. It's in a really good part of town. It's like the Marlboro Estates. Kind of looks over at the Papago Mountains. Really neat kind of neighborhood. Our family actually already has a house in that neighborhood. But we're going to do the all-in-one loan on that place. Because we were looking at how that loan will work. And, like, as real estate investors, there are times where we are cash heavy, where we're waiting to find that new deal. And we keep it in checking and savings, because we're like, hey, if I need it, I can get it real quick and I can go buy the deal. And so with this property and this project, I was going over it and I was like, our idle money, let's say our rent's $3,500 a month. When we have the money parked there, great, our payment's only $1,000 or whatever the number is, so we'll make $2,500. When we need to go deploy the money and whatnot, maybe we cash flow $500 a month for that time frame, and then we'll go, make our money back and make our $2,000 a month or whatnot again. Right. So we're going to definitely do that for that property.
How would it work for people that are always talking about the BRRRR?
The BRRRR method?
Yeah.
You can do a BRRRR method with this project or with this loan type. Yeah, it's interesting. The guidelines, for the most part, mimic Fannie on this product.
Yes.
Okay.
There are subtle differences, which are, I think, beneficial, the subtle differences. But for the most part, it's the same type of thing where, say you go buy something cash, do your your rehab and everything. You've got your after repair value. They'll give you, say 70 or 75% of that value that you can take cash out. So you can totally still do it as a BRRRR. That's actually how we're doing the North Tempe property. We took it down with cash hard money, and then we'll BRRRR that property.
Yep.
Yeah.
Kind of assumed that was kind of why I threw it out there. It's kind of a baited question.
I was good bait.
Yeah, but no, and it's nice because we did a couple other BRRRRs that we were so blessed and fortunate to get, like in 19 and 20, as the market's on its way up. So we bought them right, did our rehab, and then certainly the benefit of the market helped us out a lot, and we're able to get even more cash out, and so that was really nice to be able to do. So that was a big deal too. But, like in thinking about investors, I was just thinking about this, that, for each property that we have a reserve account for each one of those properties that we keep there no matter what. It's, again, our own sleeping at money night, right, for the investment properties. So for that money, we're not looking to use that money. So it's a perfect place for us to park that money, to sit and go, hey, we've got $50,000 in there for this account. We've got another $50,000. We've got $100,000 sitting there. Well, how is that going to benefit us? So, again, as investors, this is just an amazing opportunity. The other thing is, and John, share this with us, we've had some really great conversations with financial advisors, right?
Yeah.
And helping people. So, share with us a couple of successes we've had just this week about that.
Yeah. No, financial advisors definitely love this product because when you can sit down with them and say, okay, here's your client, who makes X amount and has X amount in assets with you. They're going to save, say $200,000 in interest over the life of this loan, and maybe they pay it off in half the time frame.
Yep.
So as far as the full financial picture of that person, you're like, we're going to help them pay their loan off and at twice the rate, save $200,000 in interest, which feasibly means they've, reached or gotten closer to financial freedom sooner. And that will help, obviously, their personal situation, but that also might help the financial advisor in the sense that now they have more money to potentially give you and invest and help their situation further. Whereas if they just did the 30-year, it didn't do that. Like when we've worked with financial advisors in the past, all they were looking at is, okay, well, what's the rate on the 30-year? The last 2 years when rates were super low, the financial advisors are telling all their clients, go refi, go refi, go refi. Now they're like, don't touch it, don't do anything. But with this product, based on their situation, their circumstances, it totally makes sense. Like we have an all-in-one loan that we're doing that'll close this month, and she was referred by a financial advisor, and she's under contract on a place, and I showed her the product with the financial advisor. We went through it, and based on her set of circumstances, she'll end up paying this loan off in like 4 or 5 years. And she'll save, a boatload in interest. And so she was like, this is, I'm not even worth talking about a 30-year fix. Like, just do it, make it happen. Right. So it's cool. They like it because it definitely helps. It's the first time that as a mortgage loan officer, I can come to a financial advisor and give them something of serious benefit. Because in our industry, leads and things tend to go certain ways, right? Like realtor to loan officer. Of course, sometimes we can turn it back around, but generally speaking, it's going one way. Yep. Same with like financial advisor to us. Sometimes we can get them clients to go with them, but they're generally referring us somebody for, hey, they need this financial need. Yep. So it's nice to really be able to sit with them now and say, look, I thank you so much for, trusting us and being able to send us people, but now I have a product that can hopefully send you back a lot more money and promise. Yeah. That's nice to be able to do.
Well, at least have something you could actually provide a value to their clients as well, as opposed to just, like you said, the traditional 30-year fix. It's like, here's how we could actually be saving your clients money and really help them.
Here's another thing, another financial instrument you can use at your disposal.
Right. Well, another tool to have in their pocket.
Absolutely.
Yeah, I feel like that's huge, as opposed to them just being like, oh yeah, go this way. They could actually educate their client, like, hey, there's another option.
Yeah,
and it kind of
it's
makes them stand out.
Yeah, for sure.
Yeah,
for sure.
That's cool.
Yeah.
What other things are you guys excited about on the horizon?
Oh my gosh. Well, we're excited to go out and share everything and teach. I've been doing, in addition to, being a mortgage professional for 27 years, I've taught continuing education, as you know, for 15 years. Yep. So we're teaching lots of classes, sharing this product, as well as, home fund it with people, but just trying to get out there and educate people. Because I think that, it's interesting now that, people in this industry have a little bit more downtime. We've been teaching a lot of classes and a lot of people have been coming, so we have a little more participation. So I would say that another opportunity for all of us in this market and this business is really, take advantage of what you're going to learn right now. because again, if God willing, what happens next year is what we think. If we go into the mid fives, I mean, the prediction is somewhere right around 5.4%. If that happens and we get a frenzy again, you're not going to be able to have as much time to learn about everything and, really soak it in and everything. So I would say, read a lot, educate yourself, sharpen your tools and everything, and get ready. But, just see what you can do right now to help people. Because, our business is about serving people. And, people ask me, they say, Rebecca, you've been a mortgage professional for 27 years. What do you love most about it? And I say two things. My father was in higher education. He was a dean. And so I love educating, and my passion is, sharing all this information. But the other thing is in social work, and we love to help people, we love to serve people. And when you can help somebody, realize the greatest American dream of homeownership, it's powerful. We go to closings, that. We show up, we like to do that, and, get tears in your eyes and you're all excited and everything. But I think really to look at, helping people and, really be there for people, I think is important. So, yeah.
I agree. Yeah, and I would second what you said about classes. It's amazing how many people are coming to classes right now.
Yeah.
They're getting filled. Everyone's looking to get educated right now and figure out what's the new cutting edge thing or whatever for to help them kind of lead generate. And it seems like a lot of people are just kind of going back to basics.
Right, they're regrouping.
From what I've heard. Yeah,
it's good because I think we all need that. I always feel like you get crazy and everything. You're like hair on fire, and you're like, okay, can we just calm down and let's just see what's going on and regroup and everything. And I think now's the time to do that. So I think look at this as an opportunity to really take advantage of that right now.
Yep.
Yeah. And you guys are sponsoring lots of great classes. It's awesome.
Well, thank you. Any big tip you guys have for your real estate agent partners?
Well, I would say understanding this product, the all-in-one product, because it is certainly something that can get people off the fence, right? Because there are absolutely people right now who can buy houses and want to buy, but they see an interest rate and they see a payment and they go, nope, I'm not going to do it. I don't like that at all, right? So this product does provide conversations and for the right people, it is an absolute difference maker. I mean, we're having conversations pretty much daily with people who, as we explain this to them and they get it, they're like, oh, yeah, I don't have any reservation about buying right now. So definitely educating that.
Yeah, I want to commend you guys on moving to an organization that allowed you to really kind of stand out. And it wasn't like you were moving there for more money or anything. You were moving there to better your services and better for your clients and stuff. So I think that speaks volumes of you guys and the company as well.
Thanks.
Thank
you.
Absolutely.
Yeah. Absolutely.
Yeah. Well, John, Rebecca, thank you so much for coming on for
Thank you,
an episode.
Braydon, for having us.
Had a blast. Absolutely.
It's
Looking forward to playing
awesome.
golf on Friday.
Yeah, me too. I'm
you
showing
guys,
up at 8:30 and I'm getting on the driving range.
Yeah, so you guys get to do that. So while you guys are golfing, I'm going to be working, holding down the fort or, womaning the fort, so to speak. And I'll be happy. So, yeah, you guys are going to go golfing for a great cause and everything. So I'm proud of you boys for doing that. That'll be fun. So, yeah, so go tear it up. I hope you guys win.
Yep, hope so. Yep. Hopefully another hole-in-one on that one par 3 that when Brandon hit that one when we were playing.
Yeah, that would be nice.
Yeah. We'll love it. Thank you, guys.
Thank you.
Thank you.
And thanks for sticking around for another episode of Break It Down with Braydon. Stick around. More to come. Thanks, guys.